What's up, my Financial Fit fam? Adam here, and thank you for coming back as always. I'm sure as probably you've already heard, GameStop stock has been flying off the shelves, along with several others, like AMC, Nokia, BlackBerry, just to name a few. And people have been throwing around terms like a short squeeze, or talking about a group of fools on the internet who go by the name of WallStreetBets, while the rest of the market is dumping. So in today's video, we're going to talk about what's going on with GameStop, we'll call it GME, in its most simplest form possible. So let's get going. If you like hearing about information like this or just want to learn how to invest on your own, make sure to subscribe and hit the like button. If you've owned a video game console sometime between Sega Genesis and pretty much a PS3, you've probably been to GameStop at some point. But if you don't know what it is, GameStop is a video game and console retailer in North America. You can normally find it at a large Taj Mahal-esque building between an Auntie Anne's and a Foot Locker. And these buildings now we just call them malls. With online shopping on the rise, a pandemic, and the ability to download games directly to your console, GameStop has really been struggling for the past several years. Its stock hit a new all-time low in March of 2020 at $2.60 per share. And even after the economic recovery going into the early summer, we saw that the stock was hovering around $5 per share. With sales on the decline, and with stores closed because of COVID-19, many investment firms believe that GME would be going out of business and therefore their stock being worthless. So investment firms like hedge fund Melvin Capital began short selling GME stock. Short selling a stock is only profitable when that stock price falls. So let's create our own example. Let's say I'm an investment institution and I want to short a stock, one share. I borrow that one share and then I sell it to you, the investor, for $10, because that's what the stock is worth. That stock goes down in value to $6 per share. I then buy that share back from you for $6, and then I return that share back to the lender. My profit becomes the difference. So it'll be that $10 that I originally sold it to you for, minus the $6 I paid to get that share back. So therefore, my profit would be $4 per share. Now there is a grave danger to short selling. That's instead of the price going down, it goes up. And in this case, you could lose a gaggle of money. So now let's go back to our example. Instead of the stock going from $10 to $6, it goes up to $20 per share. Now, as the short seller, I'm obligated to buy those shares back. I then have to pay the current price, which is $20, and then I have to return that share back to the lender. I sold it to you for $10. I then had to buy it back for $20. Therefore, I am out $10 for that one share. Now let's say that stock goes up even more, up to $50 per share. Well, now I'm at a loss of $40 if I shorted one share of that stock. Let's take it a next step further. It goes up to $100 per share. I have to buy it back at $100. I sold it to you for $10. Therefore, I am losing $90 for each share that I've shorted. Ouchies! Now, GameStop has 46.89 million shares available for trading. That's what we call the float. However, over 70 million shares were actually being shorted. But wait, how's that possible? It has 47 million shares or so available for trading, but over 70 million are being shorted? Now let's go back to our original example. I've shorted a share and I've sold it to you. That lender will actually allow me to take that share I've already sold and lend it out to someone else. So basically, I am double selling the same share. Now, the information that I've shared with you that you've seen on your screen is public knowledge, like the float and the percentage of shares shorted. You can find that on Yahoo Finance, and I will leave a link in the description below that will take you right to that page. Then a subforum group on Reddit who goes by the name of WallStreetBets found this information and came up with the most ingenious strategy. Buy as many shares of GameStop as possible, and whatever happens, don't sell. Now, this strategy accomplishes two things. One, the demand is higher, so it pushes the price of the stock upward. But it also reduces the amount of shares that are available to actually be traded. Now remember, those shorters are obligated to buy those shares back, but they have two problems. The price of the stock has gone up instead of down, and the amount of shares that are available for trading is significantly less. So therefore, they are buying more shares at a higher price point, and they're also increasing the demand because they have to buy those shares back. As that stock price rises, that investment firm who is shorting the stock must provide collateral. And that's usually either in the form of cash or in stocks that that company already owns. Hedge funds like Melvin Capital can either buy the stock back at elevated prices to minimize their losses, or they can provide tremendous amounts of collateral and bleed out. With more and more retail investors piling in trying to buy GME and holding, and those hedge funds trying to get out of their short positions, the demand and the price for GME keeps increasing. As a matter of fact, we saw GameStop stock increase by 5 times over the last 5 days of trading. This is what we call a short squeeze. Not only has GME stock increased by 5 times, but the amount of subscribers to this subreddit has gone from 1.7 million to over 7 million subscribers today. This financial phenomenon has grabbed the attention of the country and has also gained support by several celebrities, including Mark Cuban, Chamath Palihapitiya, Elon Musk, and yes, even Ja Rule. Please don't forget, Ja Rule did give us the Fire Festival. I don't know if I would trust him. So what happens next? There's a lot of unknowns and there's a lot of different scenarios that can play out. Now, quite a few hedge funds have already said that as of Friday, they have sold out of their short positions. But they could be bluffing because individual short selling information is not public information. If they are telling the truth, which I don't think they are, that means that there would be more supply of GME stock that would be available for trading. Therefore, the price should go down and GME stock value should come back down to earth. Now, on the other hand, they could be lying. And if that's the case, we could be heading straight past the moon to Uranus. Dirty mind. We've seen something very similar happen back in 2008 with Volkswagen. A short squeeze happened, driving the price all the way from $200 per share upwards of about $950 per share. What we saw immediately after hitting that peak was a very steep, significant decrease in the stock value. Many retail investors will get rich off of GME stock. And it's taught us something that we've already known, which is that hedge funds are crooks and the financial system is broken. GameStop currently sits at around $325 per share, and it can go up a tremendous amount from here. Upwards of $1,000, maybe $2,500, maybe $5,000, maybe to the moon. But just a word of caution. At the end of the day, whenever that day might be, this short squeeze will end, and someone has to be holding the bag. In this case, it will most likely be a retail investor. Remember, you don't need to follow the crowd, and always do your own research when making an investment decision. Invest wisely and stay safe. As always, save, invest, and grow. Ciao, ciao.